Harshal Kulat. Please tell us about yourself.
So, as you know, my name is Harshal Pilat. I have completed my graduation in engineering from Vishwakarma Institute, Pune, and post that I have done my MBA in finance from Verical Institute of Management Development and Research Management. Since then, I have been preparing for government exams. I have uh, interest in
What is
finance.
what is what is your family?
Sir, my parents, both of them are primary teachers, and I come from a town near Shirdi. Rahuri is my town's name.
Mhm. What is more famous in your district?
Sir, my district, Ahmednagar, it is famous for variety of things. In Maharashtra, it is known as a district of progressive thoughts because we have various social and religious, economical establishments. For example, our district has the first sugar factory, cooperative sugar factory in India, which was set up by uh, Honorable late Vittal Rao Vikhe Patil. Other than that, few religious places such as Shirdi, Shani Shingnapur, these are situated in my district. Other than that, we also have Maharashtra's first agricultural university, which is Mahatma Phule Krishi Vidyapit, which is situated in my town itself. Uh,
What is your biggest strength and weakness?
Sir, my biggest strength is whenever I think about any uh, issue or challenge, have a I think about it from multiple perspectives. So this thought process was developed due to my hobby, chess. Other than that, uh, uh, I have attention to details whenever I read through documents or uh, whenever I go through various websites. So these are my strengths. Weakness, maybe in certain cases, I go into much depth where it is not needed. I think that could be a weakness.
Mhm. What is a small finance bank?
Small finance banks are set up from the objective that they can finance the underserved and unserved population of India.
What is the capital that is required for starting MSME? Sorry, small finance banks. Hello, 200 crores.
200 crores, okay.
For payment banks, it is 100 crores. For universal bank, it is 500 crores.
Sure, sir, I'll keep that in mind.
Yeah. What is NWC?
NWC stands for Net Working Capital.
Then
Net
what is the difference between MPBF method 1 and method 2?
Sir, in MPBF method 1, uh, we calculate the maximum permissible bank finance by by subtracting the margin from calculating the margin as a percentage of net working capital. So we subtract uh, we find the working capital gap, that is current assets minus current liabilities excluding the bank borrowings, and we take 75% of that, which is for the maximum permissible bank finance according to method 1. When calculating a maximum permissible bank finance by method 2, uh, we uh, we take the 25% of current assets as the margin, and so we subtract that margin from the working capital gap, that is again current assets minus current liabilities excluding the bank borrowings, and remaining amount can be financed by the bank. The key difference comes in the current ratio after the bank finance. According to method 1, the ratio comes as 1.17, whereas when we finance using the second method, the current ratio comes as 1.3.
Have you heard of the abbreviation CRILC?
Acrylic, right?
Yeah,
Sir, it is a central repository for of information on large credits.
good.
So,
What is CIBIL?
Credit Information Bureau of India Limited.
What is the
It is,
difference between these two?
sir, Acrylic maintains records of large credits which are higher than 5 crores. So, uh,
Very, very happy. How do you remember this? We have never discussed this in the last 10 days. Oh, good.
sir, this was in the syllabus when we studied for Punjab National Bank and SIDBI. So,
Oh, very good, very good, very good. Excellent. So now I suggest you please read this for the sake of everybody's information. It will be
sure, sir.
useful for all of us. I am very happy. I thought you are not going to answer this, but you answered me. Please read.
Just a minute, sir. Let me zoom in a little. Yeah.
Are you getting
So,
it on the screen?
yes, yes, I can see it. So, Acrylic is a central repository of information on large credits. The purpose of Acrylic is it is a repository for information on large credit exposures of borrowers, typically loans above 5 crore. It helps monitor large borrowings to assess credit risk on a macro level. Uh, CIBIL stands for Credit Information Bureau of India Limited. It is a credit bureau that collects and maintains credit information of individuals and businesses for lenders to assess creditworthiness in retail and small scale lending.
Then comes this one, data coverage.
Data coverage. Acrylic is focused on large borrowers and aggregates credit data from all banks for loans 5 crore and above. Includes details like outstanding fund-based and non-fund-based exposures, classified assets, etc. Uh, for CIBIL data coverages, it covers individual and small business credit histories, including loans, credit cards, repayment histories, and defaults. Regulatory body, CRILIC is operated under the Reserve Bank of India with direct reporting from banks and NBFCs. Uh, CIBIL is licensed by RBI but operated by TransUnion CIBIL, a private company. Use case of CRILIC is it is used mainly by banks and regulators for monitoring large credit exposures, early warning signals for default, and systemic risk management. CIBIL is used by banks and lenders to assess credit risk for granting personal, business, and consumer loans. Nature of data. CRILIC focuses on large credit exposures, classification of NPAs, and recovery status of large loans. CIBIL focuses on credit source ranging from 300 to 900, credit history and repayment behavior of individuals and small businesses. Access. CRILIC is accessed mainly by banks and financial institutions for monitoring and regulatory purposes. CIBIL access by lenders for credit appraisal and by individuals for credit monitoring. Scope of CRILIC is large loan credit monitoring, systemic risk assessment. Scope of CIBIL is retail and MSME credit assessment and scoring. Summary: CRILIC is a centralized database maintained by RBI for large credit exposures 5 crore and above. helping banks and regulators track big loans and risk at systemic level. CBIL, on the other hand, is a credit information bureau that provides uh, credit scores and reports of individual and small businesses to aid lenders assessing day-to-day consumer and retail lending risks. Both serve distinct but complementary functions in India's credit ecosystem.
Very happy. I'm happy I asked this question to you. Good. Next question for you. Explain interest coverage ratio and its importance.
Interest coverage ratio tells us about whether the entity will be able to service its interest on uh, debts from its operating profit or not. The formula for interest coverage ratio is EBIT divided by interest expense. Uh, Higher interest coverage ratio is tells us that the business will be comfortably able to service the interest expense.
Hmm.
So the higher ratio is better.
Are you seeing on the screen now? What is
Yes,
interest
sir.
coverage? Please read.
Interest coverage ratio is a financial metric that measures company's ability to pay interest on its outstanding debt with its earnings. It shows how comfortably a company can meet its interest obligation from its operating profits.
Formula.
Formula is interest coverage ratio, EBIT, earnings before interest and tax divided by interest expense.
Interpretation.
If a company has ICR of 5, it means its earnings can cover interest payment 5 times over.
Hmm.
And ICR above 3 is generally considered healthy and indicates good financial stability.
Hmm.
An ICR below 1.5 signals that the company might struggle to meet its interest expenses,
Hmm.
indicating a higher risk of default. A ratio below 1 means this company is not generating enough earnings to cover interest. This is a red flag.
Hmm.
Importance of interest coverage ratio: assessing solvency shows whether a company has sufficient earnings to cover interest payment and avoid defaults. Credit risk indicator used by lenders, creditors, and investors to evaluate the riskiness of lending or investing in a company. Financial health monitor: a declining ICR can signal deteriorating financial conditions. Investment decisions: investors use ICR to understand risk before buying shares or bonds. Loan covenants: some lenders require a minimum ICR to be maintained as a part of lending agreements or covenants.
Good. Very good. Best wishes. Thank you. I think you did well.
Thank you, sir.
Arshal Kulat. You have appeared for PNB also.
Yes, sir.
Mostly you will get it there. Best wishes.
Thank you, sir.
Thank you. Bye. Next, anybody has come for mock